It's time for the midweek check-in here on Stonkcast. The markets continue to fly high. Tesla deliveries came in below expectations, but the stock still is up today. We got the big, beautiful tax bill in front of the House of Representatives and running into some headwinds. And on top of all that, the U.S. struck a trade deal with Vietnam. We got all that and a whole lot more to get into. Make sure to share with a friend, like, subscribe, and follow wherever you listen to podcasts. And now, folks, let's get into it. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host as always, Brandon Shar. Welcome back, folks. We got a midweek check-in, and yes, it is a shortened trading day today here on Thursday. And the markets will be closed on Friday for the 4th of July, but we still have a ton to unpack before we close out the week. So first of all, let's do a market check-in from Wednesday. We were up again. Surprise, surprise. Nvidia was a big winner, up almost 3%. You had Apple up big, Google, tech continuing to hold up the market. Oracle, which we'll get into, struck a deal. They were up 5%. Massive day for Oracle. Tesla was up. We'll get into that. Meta was down slightly, but overall, you had the big tech companies really holding up the market. Let's do a quick check-in on the S&P 500, which of course is at an all-time high, currently sitting at 6227. And really showing no signs of stopping. This thing continues to rip. If we take a look at the NASDAQ, closing in itself yet again on an all-time high, currently sitting at 22,641. And if we do a quick check-in on the Russell 2000, it did get above the 200-day moving average. That is massive. WM, the Russell 2000 ETF, had a very good Wednesday, up 1.39%, currently setting at 221. And the all-time high for the Russell 2000 is 244, so we'll see if it can find its way back up there and join the party with the S&P and the NASDAQ. But, I mean, small caps look fantastic right now off those April lows. Again, above that 200-day moving average. That is a very, very big bullish sign. Quick check-in on the VIX. The VIX right now is sitting at 16, and, it's come off quite a bit. It's clearly underneath 20, and it's underneath the 200-day moving average, the 50, the 20. It's just been coming off because we've continued to have this rally. So as of right now, a lot of confidence in the market based off where the VIX is sitting at right now. Usually when the VIX is above 20, that shows a lot of indecision, a lot of fear out of investors. When it's below 20, the markets are stable. Investors feel more confident in participating in the market. And as of right now, that's exactly what we are seeing. Quick check-in on Bitcoin at time of recording, up over 3%. And looks like it wants to make a run for its own all-time high, up around 111, 112, currently sitting at 109, 305, and looking very bullish, just like everything else in the market. So, as of right now, things look great. Everyone's 401k is very, very happy right now, and it doesn't really seem, at least in the near term, that there's going to be a whole lot to derail this. Let's get into some macro news, something that may have contributed to the run-up on Wednesday. Trump says U.S. struck trade deal with Vietnam that imposes 20% tariff on its imports. Now, obviously, this isn't the major tariff deal that everyone is looking for. That would be more of the big players such as China, the EU, things like that. But nevertheless, it is a deal and it did get done. President Donald Trump said the United States has struck a trade deal with Vietnam. The agreement includes a 20% U.S. tariff on Vietnamese goods, as well as 40% trans-shipping tariff, Trump said. He announced the deal days before a deadline paring back his reciprocal tariffs is set to expire, sending U.S. duties on imports from dozens of countries soaring, and this directly from the president on his Truth platform. Quote, "It is my great honor to announce that I have just made a trade deal with the Socialist Republic of Vietnam after speaking with To Lam, the highly respected General Secretary of the Communist Party of Vietnam. It will be a great deal of cooperation between our two countries. The terms are the Vietnam will pay the United States a 20% tariff on any and all goods sent into our territory and a 40% tariff on any transshipping. In return, Vietnam will do something that they have never done before, give the United States of America total access to their markets for trade. In other words, they will open their market to the United States, meaning that we will be able to sell our product into Vietnam at zero tariff. It is my opinion that the SUV, or as it is sometimes referred to, large engine vehicle, which does so well in the United States, will be a wonderful addition to the various product lines within Vietnam. Dealing with General Secretary To Lam, which I did personally, was an absolute pleasure. Thank you for your attention to this matter." So we got a deal, which is great. As this article lays out here further, it was unclear from Trump's post when the deal will take effect or if it has been officially signed by both parties. So we didn't really get that clarification there. But, at least according to the president, a deal was done. Trump has signaled that he may ignore or revise the upcoming deadline for his reciprocal tariffs to snap back higher. The 90-day pause, which lowered tariffs on nearly all other countries to a blanket 10% rate, was imposed in early April to give countries breathing room while they negotiate deals with the U.S. While the deadline with the deadline approaching, the Trump administration has only struck revised trade frameworks with China and the United Kingdom, though it has repeatedly said the U.S. is close to deals with numerous other countries. So Vietnam, whose exports to the U.S. reportedly comprised 30% of its gross domestic product last year, is especially vulnerable to Trump's tariffs. So this is the first, hopefully, of many deals. Keep in mind, we do have that 90-day pause that will be lifting or be done with on July 9th. So mark your calendars for that. We're hoping we get some more deals before July 9th, but as of right now, we at least have Vietnam. And again, look, I know this isn't the big one everybody wants. We want a China deal. We want a European deal. But, it's still something, and I think it definitely contributed in part to another historic day for the S&P 500. The S&P 500 on Wednesday was up almost 0.5%. So I believe that did contribute to that. Now let's move on to the big, beautiful tax bill. As I mentioned on the Sunday market prep episode, we did cross a hurdle with the Senate as it relates to the tax bill, and now it moves on to the House of Representatives, and we are catching some headwinds here. The House GOP infighting holds up key vote on Trump tax bill. So Republican leaders in the House appear to be running into problems Wednesday trying to corral enough votes to move President Donald Trump's marquee domestic policy package forward to a final vote. As of 3:30 p.m. Eastern, the near-term fate of the mega bill was uncertain as both moderates and conservative hardliners pressed their leadership for changes to a Senate-passed bill. House Speaker Mike Johnson spent the day working to win over the holdouts in his conference, but Representative Thomas Massie, Republican from Kentucky, indicated Wednesday afternoon that there were still, quote, probably 10 no's at the moment within the conference to Trump's mega bill. Not great. Massie was one of two Republicans, along with Representative Warren Davidson of Ohio, who voted against Trump's bill in May, before the Senate implemented its own broad changes to the package. So we are still, at least at time of recording, waiting on the House of Representatives whether or not they're actually going to pass this or not. Obviously, there's a lot of individuals on both sides of the aisle that don't believe this bill is going to be beneficial. Obviously, we know Elon Musk and how he feels about the bill. And so, the president, his goal, very aggressive goal, is that he wants to be able to sign this before July 4th, which is, of course, on Friday. So the time is a ticking. In a sign of a stalemate plaguing Johnson's conference, Republicans struggle to even garner enough votes to pass standard measures that are typically the easy part of passing a tough bill. The House cannot begin voting on the rules that will govern final consideration of Trump's megabill and ultimately the bill itself until they agree on debate rules. Every vote on a bill in the House has its own rules that need to be approved independently after a separate dedicated debate and a vote. So still a lot of work to be done here. The Senate did their job as it relates to Trump's bill. But the House of Representatives, Mike Johnson, is, he's running into some issues here. So we'll see what happens on that, see if we get any updates. I would venture to say that chances are they're not going to get the sign before July 4th like the president wants. But hey, if they are able to pull it off, then, obviously that would make President Trump very happy. And in either case, I would imagine when this does get passed, if it gets passed, this will just be more bullish fuel, if you will, to the overall market. Why do I say that? Because there are incentives in here. There are tax cuts for corporations, which will allow earnings to be better for various companies, tech companies in particular, right? Which have been very notable in powering this market rally from the April lows that we've seen. I mean, goodness gracious, NVIDIA is the largest company in the world right now, continues to ride high. And you have other companies like Meta and, there's just so much tech right now that is really holding up this rally. And that's not to say that this isn't a broad market rally, but it is very notable that, you have companies like NVIDIA that are just pushing and pushing. I mean, look at this chart. We had a high of 158, Wednesday closed at 157, had a bit of a sell-off, a red day on Tuesday, and then bounced right back on Wednesday. So still a lot of strength in this. And so obviously there's a lot of companies that will benefit from this bill being passed. So we'll see what happens there. Another stock that is flying high right now is Oracle, folks. This thing hit an all-time high on Wednesday of 231 and is just ripping. And why is it ripping, you may ask? Well, according to Yahoo Finance, Oracle OpenAI expands Stargate deal for more U.S. data centers. So OpenAI has agreed to rent a massive amount of computing power from Oracle Corp. Data centers as part of its Stargate initiative, underscoring the intense requirements for cutting-edge artificial intelligence products. The AI company will rent additional capacity from Oracle, totaling about 4.5 gigawatts of data center power in the U.S., according to people familiar with the work who asked not to be named, discussing private information. Yeah, you probably shouldn't do that. That is an unprecedented sum of energy that could power millions of American homes. A gigawatt is akin to the capacity from one nuclear reactor and can provide electricity to roughly 750,000 houses. Earlier this week, Oracle announced that it had signed a single cloud deal worth $30 billion in annual revenue beginning in fiscal year 2028 without naming the customer. The Stargate agreement makes up at least part of that disclosed contract, according to one of the people who were cited from this article. Stargate, OpenAI's project with partners including Oracle and SoftBank Group Corp to invest $500 billion in AI infrastructure, was first announced in January at the White House. So far, Oracle has developed a massive data center in Abilene, Texas for OpenAI alongside development partner Crusoe. To meet the additional demand from OpenAI, Oracle will develop multiple data centers across the U.S. with partners. The people said sites in states including Texas, Michigan, Wisconsin, and Wyoming are under consideration. In addition, expanding the Abilene site from a current power capacity of 1.2 gigawatts to about 2 gigawatts, they said. OpenAI is also considering sites in New Mexico, Georgia, Ohio, and Pennsylvania. So a lot going on here. So Oracle is striking deals. OpenAI is striking deals. I mean, the AI frenzy just continues. But Oracle in particular, this thing is ripping. I mean, we had the gap up from 178 to 192 back in early June, June 12th to be exact. And really since then, this thing has just taken off. So as far as where this thing could be headed, I'd be looking at the psychological level next if you are looking to trade this of 250. So, we're about 20 points away from that right now. And if we do a quick check-in on the options chain for Oracle right now, it is looking massively, massively bullish. 199,000, just under 200,000 calls transacted on Wednesday relative to 61,000 puts. That is a put to call ratio of 0.30. Very, very bullish indeed, with a current IV percentile of 36%. So, a lot of bullish calls, I would venture to say, are being placed on Oracle right now, seeing this bull run continue. Something to take note of, though, just to be clear, from a relative strength index perspective, RSI, it is insanely overbought right now, obviously, considering the run it's been on. The RSI is sitting at 77. But hey, you know what? That RSI did hit 88 back on June 13th. So who knows? It could keep going. Things can remain overbought for a while, especially if they have steam, any kind of news, especially like this with AI. Everyone's hot for AI right now. So, this thing could continue to rip before we see a bit of a pullback. But I wouldn't be too surprised to see a bit of a cooling off of the RSI indicator before we make a run to 250. But any kind of headlines that drop relative to tariffs, any new trade deals, anything with the tax bill, that could all impact this thing, as well as, of course, the overall market. So Oracle is definitely something to have on your radar. Let's take a look at Tesla. Good old Tesla, folks. Everyone loves some Tesla. This thing is always, this is, in my opinion, this is the most expensive meme stock out there right now. And yes, I do consider it a meme stock because everyone talks about it. It definitely fits all the criteria for a meme stock. It just happens to be the largest one, being valued at $1 trillion market cap. Tesla on Wednesday dropped their deliveries. And, their deliveries dropped. So Tesla reports 14% decline in vehicle deliveries, marking second straight year-over-year drops. Tesla reported around 384,000 vehicle deliveries in the second quarter, a 14% decline from a year ago and second straight quarterly decline. Shares of Tesla are down 22% this year as of Wednesday's close, the worst performance among tech's mega caps. Tesla faces an onslaught of competition, especially from Chinese EV makers that sell newer and more affordable models, and political backlash against CEO Elon Musk. So even though the deliveries were down, technically speaking, they actually came in a little bit better than what the street was expecting. The electric vehicle maker reported 443,956 deliveries in production of 410,831 vehicles during the same period last year. Here are the key numbers, though. Total deliveries for Q2 of 2025, 384,122 vehicles. Total production for Q2 2025, 144 vehicles. So Wall Street analysts were expecting Tesla to report deliveries of around 387,000, according to FactSet. So they were below Wall Street's expectations, but they weren't severely below. I think a lot of people were expecting a steeper drop off relative to that Wall Street expectation of 387,000. And so while, they didn't beat or meet that number, they came in below it, but not as bad as what people expected. And I think that is part of the reason why we saw such a rip on Tesla on Wednesday. If you're looking at this on YouTube right now, looking at the daily chart for Tesla, that is a very, very bullish candle that we had on Wednesday. I for sure got my face ripped off. I'll be 100% transparent. I bought some puts on Tuesday afternoon, expecting that number to be weak, expecting some Elon tweets, some more Twitter thumbs between him and President Trump, and the fact that we were toying around on Tuesday with that key level of $300 on Tesla. Key because it is a psychological level, and also from a Fibonacci retracement standpoint, it was also sitting at a very important level, the 61.8% retracement point. So it was a very, very important level. If Tesla would have broken below that, I fully expected to see a drop back down to, basically 280-ish. But it clearly did not do that, and my puts will confirm that. I had to sell those today for a loss. That really sucked. But hey, for all my Tesla bulls out there, congratulations. Pretty bold move going into that delivery number if you had calls, and it paid off big time. Tesla was up 4.97% on Wednesday and is currently right at about that 200-day moving average of 314. So we'll see if it can continue up. Basically we really struggled right around that 330 to 335 range on Tesla. And so because it held 300, I would expect a retracement up to that area. And it seems like there is a lot of supply there in that 330 to 335 range. If it can somehow get beyond that, whether that's Tesla specific news or any bullish news from the Hill as it relates to that tax bill, anything like that, we might see a push higher. Although I would say, with the bill getting passed, if it does get passed, that is not necessarily bullish for Tesla. In fact, I could argue it's bearish considering all the EV credit cuts, hence the reason Elon is so pissed about it. So that could be bearish once that does pass. Again, if it does pass. But as of right now, at least on the very, very short term, Tesla looks to be holding firm that 300 level. The bulls are defending it well. And so obviously, as we always do on the show, we'll definitely be keeping an eye on that. Also, keep in mind that we do have earnings season coming up, folks. So obviously with this week, we have the 4th of July coming up on Friday. But then starting next week, we are going to be kicking off Q2 earnings season. We're going to have some big names reporting like Wells Fargo, JP Morgan. The banks really are going to be the highlight for next week. And then beyond that, towards the end of July, we're going to get some big tech names like Microsoft. You're going to get Meta. You're going to get Tesla with their earnings reports as well. So you got to keep in mind those things are going to be coming out. We've kind of had a lull as far as earnings over the past couple weeks, but we are gearing up for another earnings season coming up. And so let's take a look here at some of the important data you need to be paying attention to that is coming out before the markets have that 1 p.m. Eastern close on Thursday. As we head into the holiday weekend, we are going to get the June jobs report that will be coming out at 8:30 a.m. Eastern. By the time you see this video, chances are it's already going to be out. But this, according to Yahoo Finance, June jobs report expected to show hiring slowed while unemployment rate ticked higher. The June jobs report is expected to show hiring slowed while the unemployment rate moved higher. The data's release will come as investors closely watch for any further signs of slowing in the U.S. labor market amid growing debate over when the Federal Reserve will cut interest rates next. The Bureau of Labor Statistics data is slated for release at 8:30 a.m. Eastern on Thursday. Economists expect non-farm payrolls to have risen by 110,000 in June, and the unemployment rate to have moved up to 4.3%, according to consensus estimates compiled by Bloomberg. In May, the U.S. economy added 139,000 jobs. Meanwhile, the unemployment rate held flat at 4.2%. So here are the numbers Wall Street is expecting on Thursday, according to data from Bloomberg. You got non-farm payrolls, 110,000 versus 139,000 in May. So that's what the expectation is for June. Non-farm payrolls coming in a little bit lighter than May. Employment rate, 4.3% is expected versus 4.2%. And then average hourly earnings month over month, 0.3% versus 0.4%. And you got a couple other ones in here as well. Average hourly earnings year over year, 3.8% versus 3.9%. And then average weekly hours worked, 34.3 versus 34.3. So the big thing is non-farm payrolls and employment. So those are going to be definitely worth paying attention to. That could have an impact on the market as it relates to where we actually open on the shortened trading day on Thursday. So definitely be paying attention to that. And then real quick, before we wrap up here, just keep in mind, folks, that we do, as of right now, it does seem that we are looking at a rate cut coming in September. Any of this data that's coming out, though, as it relates to non-farm payrolls and employment, could impact this if we get some really wonky numbers, but I highly doubt it's going to impact anything for July. As of right now, there is a 23.3% chance, according to CME Group, that we get a 25 basis point cut for July, as in the meeting that will be happening in 27 days. So as of right now, a very, very slim chance that we will get that rate cut. And as I've said on previous episodes, I think part of the reason why the market is rallying is they're kind of front running some of this potential rate cut news that might be happening in July. As of right now, it seems highly unlikely, but who knows? Things could change. A new headline could drop. Powell could change his mind. But as of right now, seems like the better bet would be that we get that initial 25 basis point rate cut in September. So we will see what happens there. That's what I got for you on the midweek check-in. I hope you all have a fantastic 4th of July. Go grill. Go have a couple cold ones if that's your fancy. Go out on the boat. Watch some fireworks. Hope you have a fantastic time. I will be back on Sunday for a wrap-up of our mini-series on the Disciplined Trader, written by Mark Douglas, with our 5th installment, 5th and final. Make sure to catch that if you haven't seen those already. Parts 1 through 4 are already up on the channel. Make sure to find those under playlists for the Disciplined Trader, Mastering the Mental Game. And then Sunday evening, as always, I will be back for the market prep video as we head into a new week in July. Remember, July is historically a bullish month. Let's see what happens with this tax bill if we can get it passed. Let's see if Elon tweets anything new. Like I said, we got bank earnings coming up. That's going to be a very important indicator on the health of the economy. So a lot to unpack for next week. That'll come out on Sunday. Thanks so much for the support. Make sure to share with a friend. Make sure to like, subscribe, and follow wherever you listen to podcasts. And folks, as always, remember, plan the trade and trade the plan. Have a good one.